Raamdeo Agrawal of Motilal Oswal joins in to talk about the market. Good morning, Raamdeo. Good to see you again. Before you talk about the market, I want your takeaways on Wockhardt. Do you think or do you fear that some other Indian corporations may come out with such balance sheet disclosures? Or do you think it's a one-off and no need to worry about other FCCBs which were done at a much higher price, etc.?
Frankly, I don't know enough about this particular issue, but the companies which have taken a lot of FCCB, they would be clearly, some kind of trouble, and we could see some disturbing stories in some more corporates.
What's your call on the market now, Raamdeo, after the pullback that we've seen from our recent early March lows? Do you think this pullback is sustainable?
It looks that this time the pullback had a little more energy, and I think some of the bear operators, they also are not as confident as that of last time. And more importantly, I think there seems to be some turnaround in the manufacturing side and the corporate performance, more particularly in the February and more particularly in the March. So my sense is that there will be some kind of stabilization at a little higher level. But to say that we are out of the woods and again boom time is going to start, I think it is too early to say that.
Raamdeo, morning. Just to dig a bit deeper on that point about Wockhardt, because there's been some analysis in an Asian context but not in an Indian context on how much the debt to equity ratios have generally raised for companies or risen for companies, what kind of cash flow situation they have, and whether or not we're sort of underestimating how much cash burn there's going to be for these companies over the next few quarters. Are you worried on that front for Indian companies?
Yes, Indian companies who have not managed their leverage levels well. We are just seeing that. In the backdrop of the capital account deficit, this is the first capital account deficit in the last 10 years. So it clearly shows what kind of tight money, global tight money policy which is going around, and it's becoming very difficult even at LIBOR plus 700, 800, 1,000 bips higher to mobilize any kind of liquidity. So the guys who are stuck with this obligations, even if it is 1:1 debt equity or anything higher than that, is going to be troublesome for any of these corporates. I don't know enough about this particular issue, so I can't comment on this.
How are you feeling about what the market has traversed through this past fortnight or so, Raamdeo? We've had a pretty sizable rally, then we got a bit of a knockback, and now it seems the market's looking a bit uncertain again.
Yeah, I think after Obama came in, there was a massive downward spiral of 15, 20, 25%. I think that has just about reversed to the level where he became president. So on the back of that, all over the world, I think there is a rally, and we also saw a very, very strong rally last week. But at this level, at about 10,000, I think 2-3 times we have come here. And there is a whole lot of uncertainty. The businesses where things are great, say cement or two-wheeler or cars or wherever the sign is good. Nobody is believing that these are kind of a permanent improvement. So unless you extrapolate the what you call positive signs, even the industry guys nor the investors. So nobody has faith in this pessimistic environment. Whether these positive trends are going to continue, and that kind of disbelief is not going to allow the markets to move up, big time. So what is going to happen is that for some more time these trends have to continue to be positive, and then investors will gain confidence, and markets are probably likely to move to higher levels. On top of it, you have the political uncertainty which is going to unfold in next 1.5 months.
Just one word on this other sector that you spoke about, Raamdeo, cement. The stocks have come off well from their recent lows or the last few month lows. Are you confident buying into that sector right now with the belief that the worst is over?
I would think so. worst is definitely over in the sense that they are going to make they have made bumper profit in March quarter, and as we talk, they are making huge amount of profit for April, May, June. I mean, they got the volume, higher volume, they got the lower cost, they got lower excise duty, and they got net higher price. So I think all the four quadrants they are doing very well, and so I think I would expect at least Northern India cement companies to report one of the highest margin per ton for the March quarter. Now June quarter also they are pretty sure, but as I said, nobody is sure what is going to happen in the later part of the year. Whether this revival will continue, is it because of the very good monsoon, is it because of stimulus package which is on for the state governments and all. So I think there is some kind of uncertainty, but buying this cement companies at 1/3 or 1/4 of their replacement cost. I mean, replacement cost is about $100 per ton, and if you can buy it at about $35-40, even if you are somewhat stuck in the sense that stocks don't do significantly well even after you have bought in 6 to 8 months, I think there is a life after maybe a year or so. So if somebody has a little longer profile, I think this industry is doing well, and it could provide a good investment opportunity.
We spoke at length after the Satyam episode first broke out, Raamdeo. How have you read how things have moved, and where do you see final resolution to this?
It all depends, what kind of management transitions we do, in the sense that in right earnest, I mean, clients have been protected, employees have been protected, and now as quickly we can resolve this, new owner who should have at least as much brand equity and confidence among the clients as people had with Oswal Satyam, because the deal is not only in terms of how many people, but with whom. So I think if they get reputed company to operate Satyam operations, I think at least the company's software operations will be taken care of, and other mess of the group will be taken care of by the courts.
In the banking space, Raamdeo, between these two banks, which one would you have higher degree of confidence in buying now, SBI or ICICI Bank?
I have been buying, and I have in my portfolio SBI, so I know that bank pretty well. So I definitely have confidence, and I have been buying for my portfolios SBI. So clearly, I don't have any hesitation saying that I love SBI at this juncture, but that doesn't mean that ICICI doesn't have its own merit, because that's a global kind of the bank has a very different kind of investor profile, and people all over the world, all the FIs, they love it to have whenever banking stocks come in favor out of India.
Just to labor the point on Satyam though, Raamdeo, the one that's seen the greatest collateral damage is L&T. How would you approach that stock now?
Let's see, whether they are successful in building. I still think that if L&T can get that entire Satyam pie to run it and build L&T Infotech with that particular company, I think, and not at too high a price, I think that will be a good addition to their Infotech initiative. But I think market seems to be not liking L&T's, attempt to take over Satyam.
What's your view on Reliance, Raamdeo? Now that the stock has started pumping gas and been inking deals, what visibility do you have of earnings for Reliance in going into the next fiscal, and do you think it should be part of your one's portfolio?
Yes, I think it should be. It is the highest weighted and most respected company out of India. And I think with the gas flow starting, they might start with 15, 20, 30 million cubic feet per day. But I think it's a very long-term shift in terms of their cash flow. And nobody knows what they will do with the cash flow, ever larger cash flow.